There's so many founders that don't know their freaking numbers. How do you not know your numbers? You just hope it all works itself out in 6 months from now? That's not how it works. You will go out of business. So I learned how to do a daily cash flow forecast. And ever since then, I've been running one, literally. And it might seem a little too microscopic for many, but guess what? There's no freaking surprises. So literally, it looks like a P&L daily. I literally could tell you 9 months from now, the day that we would go out of business if we didn't have enough cash, unless there was some change. It's a lot less stressful knowing the facts. When you know the facts, you can make things happen, You don't have to sit and wonder and hope it works out. I don't care if you're the most anti-accounting personality possible and have zero mathematical aptitudes, and maybe your background is sales or something else, but you have to know accounting. You have to know the basics of accounting. If you don't, you are at a huge, huge disadvantage, especially when you go to sell.
Hey, everybody. Welcome to the Practical Founders Podcast, where every week we hear an amazing story from a serious founder who built a valuable software company and did it without big funding. I'm your host, Greg Head, and this week my guest is my friend Chad Ingram, the CEO and founder of Distro at distro.io. Chad is a multi-time SaaS founder. He did it before in Utah with his previous company, Jump, which was VC funded, and played that whole template game and managed to get out by the skin of his teeth selling the company. Very difficult challenge through that. Then he started Distro during COVID and had a totally different approach, a more practical approach. I've known him a long time. We've talked about it many times. They actually evolved into an AI-based hiring platform for large companies to help with screening candidates, finding candidates, and all the notifications and scheduling that go on to make hiring great people possible at scale. He just sold his company for an exciting exit after not growing it into a huge thing. And that's what practical founders have the choice to do. So he's happily growing Distro inside the new company, Venture, and we talk all about that. Hey, Chad, it's good to see your smiling face. Welcome to the Practical Founders Podcast.
Thank you for having me. It's good to be here.
Yeah, I was on your podcast maybe last year or 2 years ago. You and I have known each other for years and years. Maybe as many as 10 years? No, more than that, actually.
No,
And you've
yeah,
done a lot.
probably about that, or maybe
Yeah,
a little bit more.
yes. And you're up in Utah. I was just checking the snow report. I'm gonna be up there this weekend in Park City, go back and forth and all of that. So you and I have crossed paths so many times over the last 12 or 15 years. You've
Yeah.
got an amazing adventure. You just sold your latest Practical Founder Bootstrapped software company successfully. Congratulations.
Thank
And
you.
we're going to talk about all your journeys. It's great. I'm really happy for you. You know, uh, you had a lot of pain and suffering in the VC funded founder days. You ground it out
Yes.
in the bootstrap days and you successfully sold it, this like months ago.
Yeah, not too long ago. So we're still kind of in it, and it's there's just it's still, I don't know, it's exciting for sure. But glad it's over. The process of selling your company is like a daily colonoscopy. They just
Oh,
really, really need to research and find out what's going on about everything, and it's a
and
lot.
you survived. Yeah.
Yeah, we survived. We were
Yeah,
fine.
good.
Yeah,
Yeah, they're good for you. Well,
yeah.
let's talk about your company here, Distro. It changed forms a little bit and evolved really quite quickly here. What was Distro this last year when you sold it, and who was it for? Well, tell us about the business in the first place.
Yeah, I mean, just as like a quick, summary of what we are today. So we sell to mid-market and enterprise companies mostly. We do have an offering for smaller startups and SMBs who use our product, but the main product that we've built is built for bigger companies who are doing lots of hiring. So Distro is an end-to-end AI recruiting solution. So it automates and essentially manages the screening and vetting of candidates to identify who are the best fit for your product. So if you're a bigger company and you post a job on LinkedIn or through your ATS, your applicant tracking system, it will publish that job all over the web, and you'll have 1,000 candidates apply or more. That number's growing a lot more recently because of AI, more and more applicants. So Distro will help you identify and say, "Hey, here's the top, like, 3% of that group, and these are the people
That
that you should be
applied.
talking to." Exactly,
Okay.
exactly. And
So do
then
you
and
do
then yeah.
it's is it a AI first agentic platform
Yes.
that runs and does stuff just like your people would?
Yeah, yeah, exactly. I mean, there's some parameters and features that are kind of boxed in to make sure that it's doing what
Of
it's
course.
supposed to. Compared, I would just compare that to like a lot of like
Do it
agentic,
yourself. Yeah.
yeah, you know, do whatever I need you to do kind of thing, right? It's not so much that, but it's very focused on doing a few things very well,
Yeah.
scoring all candidates equally, giving them all a shot, and then making sure that the best ones are seen by the right hiring managers. And so it really just helps save. I mean, it saves so much time and so much money for companies who are recruiting.
So is that the main proposition, which is you have this explosion of resumes, we'll help you sort it out, get to the right people as fast as possible? Or is it this life cycle of a job post and resume and screening and
The
follow-up?
whole thing. Yeah,
Okay, okay.
it does the whole thing. So and essentially at the end, it spits out who's the most recommended. It doesn't choose the candidates who are hired, right?
Yeah.
That's done by the hiring managers, and there's actually a lot of law that's being created
Yep.
and precedent being created as we speak about AI agents and the responsibility that they have and the people who control those AI agents and the responsibility they have. So that's kind of interesting, and we'll see what happens there. But yeah, it's the entire workflow.
Great.
So
So that's at
whereas yeah,
distro.io, right? People can see
correct.
it there. And you selling this recruiting
Yeah,
automation? What would you call it? Yeah.
typically typically the teams that are using our product are HR and people teams,
Yeah.
specifically the talent teams are typically using our product.
Okay.
And it gives them I mean, when a, talent person, let's say like a recruiter at a company, whether they're doing outbound recruiting or they're sifting through resumes and job applications, either one, they might be able to handle like, 8 to 10 jobs at any particular time.
Mhm.
Distro can allow them to do 60, 70 plus jobs at any given
Right.
time. Yeah.
Right. Well, okay. Really exciting.
Yeah.
And obviously, you've been going for a few years, so you didn't start out this way. We'll talk about your
No.
evolution to this. Maybe it was a revolution, as we talk through the years. About how big was the company, employees, customers, revenues when you sold it months
Yeah.
ago? What
So
can you say?
so
Yeah.
so we had 14 people. We're processing about 3.5 million of ARR.
Okay, great. And was it ARR at this point? Because I know there's a little candidate marketplace in there. I don't know if you get any transactional revenue or
Yeah,
payments
yeah,
or something.
both.
Yeah.
Yeah, the revenue mix also changed. So we have a product where you can buy in a marketplace, and we take a margin off of that as well.
Okay.
But that revenue mix, we stopped selling that as much, and
Okay.
the revenue mix started to grow on like true sort of SaaS
Yeah.
subscription revenue.
Yeah.
Which also, by the way, is like Distro is a credit consuming model, and so some of the bigger companies will commit to like a longer term contract where they're purchasing a certain amount of credits
Right.
per year, but it's really a consumption based model.
So you're
Like
in the
that's how
AI
we get
world
paid.
with,
Yeah,
transactions and
exactly.
processing, inference processing
Yeah,
and all of that.
exactly.
Great. Well,
So
exciting. And you got your start in marketplace, so we'll talk about, how you got there and the evolution. You sold the company, uh, to Venture. Is that the full
yeah,
name or the official name? Venture?
yeah. Venture Employer Solutions is the name of the company.
Yeah, based
Yeah.
in Phoenix there.
Uh-huh.
That
Technically, they're
happened?
based in Atlanta, but
Oh,
they have a huge office in Phoenix as well. That's the kind of their west hub,
I
but
see.
they have offices in, oh, I'm gonna mess this up, 40 something 46 countries, I think.
Okay, a global
Yeah.
what is Venture?
So Venture basically is the big company that no one's ever heard of unless you're in the industry. They own like a little bit of everything or a little bit of everything and a lot of bit of everything. So, they basically own and dominate the HR space, the HR solution space. So they started out by owning almost the entire market, the PEO market in the United States.
Oh, I see, right.
And PEO is kind of like a joint employer solution, meaning like if you're a smaller company and you want to offer better benefits and payroll to your employees, you co-employ them with a big company. That's what venture is.
Right.
Like a lot of the tech people, they use JustWorks as a PEO. That's kind of another PEO. It's really tech focused. And so they're a massive, massive PEO. And so they process billions in payroll every year. So they started out there, and then they continued to branch out into the tech space and adding additional services and technology. And they grew so big that they got to about 46,000 employees today, and they just like everybody who's big, not using a distro, but knowing that they need to solve a problem using something like a distro to fill all these roles. They just had hundreds of recruiters just trying to, fill all the roles. When you're that big, you have natural attrition, right? You also have
Yeah.
growth headcount you're planning on every quarter. And so the only way to hire more people was to hire additional people to hire more people. And so they started looking for a solution for a distro, and they reached out to us. And after we had signed the LOI, they had shared with me that they had looked at 10 solutions, and because the concept is so new and AI in itself was so new, it's really difficult to find any like market leader to go by, right? And so as it turned out, according to them, we were the market leader. And we were processing the most data, and
You're
you
on the
know, even though
frontier.
even though we were small, we were very, very early on in doing it. And so our product and, our customer base is pretty far ahead of anybody else. So they chose us. They said we were the best solution out there.
And did they actually choose you to solve their own internal problem, or is this part of their solution stack for their customers?
Both. So
Wow,
so the one of the first things that we did in the transition period is offer our product internally, and it's gone very, very well. Like, it's
great.
expedited the process significantly. And so it's really great to be validated on our side and for them to have validated doing the deal, right? Like, so but at the same time, venture has 100 and I think it's 161,000 customers
Yeah.
globally. And so we've already, been offered to sell to that customer base. And so, revenue's picking up, that's for sure.
Well, I've done the thing where you sell to the big company, you become a product group in the big,
Yeah.
other software company, right? You don't control all the central marketing and the attention of the sales force, but you're getting people's attention because everybody is, hiring, which is touches
Yes.
everybody at the company is saying, "This is awesome."
Yeah, yeah, exactly. And it's kind of interesting because we're still operating as distro. So we're integrating, but we're still running as our own company. So we're adding headcount. We
Okay.
are,
Look at you.
still building our own tech stack, and as part of this process, they've allowed me to help and get in and integrate to their ATS and help in that process as well. So their applicant tracking system, which we work really closely with as a concept,
Yeah,
we
I bet.
integrate to like 80 different ATSs, and so that allows me to get a little bit more involved there and have some influence on how to push that product a little further as well. So it's still been fun. It's kind of like, you look at things like this. I remember telling the team as we were doing this thing and telling everybody finally about it, because everything's always super hush hush, right? And I said, this is like having raised a huge round, and almost all of it was secondary, and then there's still a bunch more budget in the bank to help us grow it. It's like literally the best
Yeah.
situation ever.
Wow.
And
Well, we'll
everyone's
talk
like,
specifically about that. What can you say about the deal? Is Venture a private company or a public company, or what have you
yeah,
got?
so Venture's a private company, very
Okay.
large private company. In
So
fact,
what
there's
can
not
you
very
say
many.
about the deal? They bought your 3,000,000. It was an exciting exit.
Yeah.
Uh, but I don't know. What can you say?
Just like about the deal,
Yeah.
one thing that was great is they didn't require me to stay. which is actually really interesting. In almost all cases, they require, when a
Yeah.
company gets bought, they require a founder to stay. They didn't. They didn't even ask me that. They just assumed it. But not as a requirement. It's usually a term.
Does that mean
And
you kept some of the ownership or transferred that into venture stock, or did they buy your whole
n
company?
no, yeah, I mean, it was a full acquisition for
Okay,
sure. I
look
mean,
at
there's
you.
there's there's deal structure to it, but, we were fully acquired. But the point is that I chose to stay on, and, and the reason for that is because it's still fun. Like, we're still building, it felt like kind of early to just be done with it. So
Right.
I'm actually having a great time still building the product.
So
Um,
so I'm gonna probe for a little hinting here. This
yeah,
wasn't
sure.
like a practical rule of 40 software company,
They didn't give a shit
multiple.
about
Yeah, this was a
and
cool
every
AI strategic leverage thing. Right.
They didn't give a shit about any s Silicon Valley buzzword or acronym. They didn't care about any of it, right? And it
Yeah.
doesn't mean that they didn't care about the financials. This is actually very interesting because 'cause I've had a lot of conversations with
Ah,
other founders that are trying to get acquired.
yeah,
Very interesting concept that I've learned again this time even more so, is that they cared about healthy financials. They didn't give a shit about Rule of 40, okay? They didn't care about, like, traditional models for churn in SaaS companies, right?
so what is healthy in a well-managed private
Positive
company?
EBITDA.
Oh, that.
Positive EBITDA, right? Or not too negative EBITDA. Okay, so I did
So it's
there's some.
accretive to their profit percentage, right?
Yeah, yeah, for sure, but it's okay, so there's a lot of interesting things about this situation. When you sell a company and you do really well, you can only pat yourself on the back so much, right? There's a lot of luck involved. That's the truth. There's
Yeah,
a lot of luck involved in that process. However, you can do as much as you can to enable that to happen. And
yeah,
I will take credit for that. I enabled that. Then luck came in and we got
yeah.
found. We talked to the right people. It just worked out really well. We had timing on our side. You don't always get that. Um, but one thing that I did is make sure that in the year financials that we represented in 2024, we burned $1,800. That's how much money we lost, $1,800. So, again, at least as a tech company, we weren't burning gobs of money,
Yeah,
right? We
yeah.
were at least being fiscally, like, responsible
Was
with
that
how we were
2024 or
thinking.
2025?
2024,
Okay,
2024.
yeah,
Now, yeah, so anyway, that's kind of this enablement. Now, thinking about this, you have a lot of founders that raise capital or even ones that haven't raised capital. They're trying because most don't. We'll talk about that too. I have a pet peeve. I love when first-time founders come around and they go, "Oh, I'm gonna raise a round in October." "Oh, you are? You think you are? Really? Oh,
yeah,
you have it? Do you got a term sheet already?" Like, they talk so confidently, but most will never raise money. It's extremely difficult.
yeah,
I did in the last one, so I've been through that experience. But the point is that they go through this process and they start talking all of the VC vernacular and the acronyms and the 10 points of data that everybody looks at. And though
yeah,
it's important, I think that's helpful points of data, they think in that box. But
yeah.
when you go to get acquired, the acquiring company doesn't really care about the same things you've been caring about for years. Why? Because everything now, this is assuming you're a startup, right? Startups are not perfect. They're chasing perfection the entire time, right? So it's never figured out, literally ever. You're constantly changing and adjusting. The big company, the strategic, assuming you get bought by a strategic, they do have it figured out. They know that your churn sucks.
Yeah,
They know that your finances aren't great. And guess what they're going to help you do? They're gonna
yeah.
help you make it better, right? So, like, it's funny, I talked to a lot of founders, a couple friends of mine even more recently that it's like, they start worrying, "Well, I can't sell. I'll never get a good multiple. Why?" "Well, because my Rule of 40 number's all effed up." "Well, because my churn rate's a little bit high." And I'll be like, "Okay, the other company's gonna fix that. They're not a VC. They're not underwriting you in the same way." So it just is almost like self-limiting when you go out
Yeah.
to sell. So some of these guys don't even go to try because they're talking to people that are venture investors. And they're like, "Well, on the venture
Yeah, and
side,
private
you're
equity
very
is
good."
another financial
Yeah,
scheme in
exactly.
that. Yes, right.
The
Wow.
big guys aren't quite as concerned. It's not to say it doesn't matter, but it doesn't have the same swing as it does when you're trying to go get a term sheet for, a Series A or something.
This podcast is sponsored by Fullscale. Fullscale gives you dedicated senior engineers in the Philippines who are vetted, employed, and supported by Fullscale. They integrate directly with your team so you can move fast and scale in days, not months. They have over 300 active engineers with a 95% retention rate who are trusted by companies across SaaS, fintech, healthcare, and enterprise. Fullscale founder Matt Watson joined us twice on this podcast to talk about his previous practical SaaS founder exits and how AI is changing product development right now. Head to fullscale.io/product-driven for a free copy of his best-selling book, Product Driven, with practical strategies to stop wasting dev cycles and build products customers actually love. Now back to the show. Congratulations, right? Let's just stop there and say I've
Thank
known
you.
you for all these years, and you had some really tough scenarios in your previous company, and I knew
For
you through
sure.
this. It was still tough, but you smiled through the game, right? You didn't have investors, and you texted me this fall and say, I think I'm onto something," and then it deals moving and the deal's done and all that, and you got through it, which is pretty darn rare. Exits are pretty darn rare, like successful ones. So
For sure.
congratulations about
Thank
that
you.
here. Let's just spend a few minutes on this transition that you're going through. You're staying with
Yeah.
the company. It's its own. Is it its own holding company outside, or do you now have finance and accounting and hiring from central somewhere serving you, and you're
Yeah,
like a
it
product group?
a
Yeah.
lot of the operational stuff is centralized, which is
Okay.
really nice,
Yeah.
but we are technically our own company. Typically, that's how they do it. It depends. Like entity structure really depends on how many companies they buy. This company's
Yeah.
so big, they I think in many cases they will keep them separate, but everything's centralized, like HR and accounting.
Yeah.
Marketing's been really awesome to be able to have marketing
So does that
assistants.
feel okay to I mean,
Yeah.
usually it's a shock to the system. I've been through it twice. It's
No.
kind of a shock. Some of it's
Yeah.
a relief. I don't have to deal with this, but then you have to deal with them.
Well, what's funny is that, this company's so large, they have the resources to take care of everybody. Like, I have a team of people who are in charge of making sure I have a good day. It's, like, really great. Like, compared to
What does
last
that
time we
mean?
got
Like,
bought
what does that
by.
mean? Like their sponsor support team?
Yeah, I have,
Yeah.
like, an account manager who goes, "Hey, you make sure Chad has everything he needs through this transition period." It's literally amazing. Like,
Wow.
literally amazing. And so
Acquisition success rep.
yeah, pretty much. Right. Yeah, exactly. So
Man.
so they, again, I mean, venture is huge and they're buying several companies a year, right? So,
And
I mean,
that's spelled
yes,
VENSURE, right?
exactly.
Yeah. Excellent.
SURE.
Okay,
Yeah,
so
it's a
it's a
little
big
bit
company. You went from
confusing.
14 to 40,000. I mean, I don't know. And I don't know, how has your world changed since you were running your scrappy 14-person company
So
a few months
I
ago?
have I have more people on the team now, so that's interesting. And it's I don't know, it should feel different and it should feel hard, but it hasn't been. I
That
don't
the
know
other
how
wait for
else.
the other shoe to drop. Okay, so let's
Yeah.
talk about why did they get so excited to have you on the team, and
Mhm.
why did it make sense for them? You had this cool thing,
Yeah.
like, if I were interviewing the leader who sponsored you and, what would they say now about what's so important about buying Distro?
Two of the things I already mentioned, like solving an internal problem, that
Yep.
alone was worth the deal for them. Then offering the solution to their customer base and having a further expansion revenue, also a huge compelling reason. But as far as an enterprise value reason, I think that buying a true AI first company really brings a lot more weight to their tech stack.
Yeah, and their
And
story.
yeah,
They
yeah,
could they could
definitely.
say, "We got AI stuff to help you out now."
Exactly.
Yeah.
Yeah, exactly. So I think there was some of that. I think there was some urgency for that as well.
Did you deal with the CEO or the corporate development acquisition team, or who did you deal.
Both.
Yeah,
Yeah,
okay.
both. I've built a relationship directly with the CEO and he's so awesome. Like I could call him right now and he'd probably answer. So
Awesome.
he's very good person. They did everything that they said they would do.
Didn't
Like,
retrade on you, huh?
no retrades,
Renegotiate a
and
deal once they find something, yeah.
yeah, for those that don't know, it's called a retrade. It's the worst awful thing ever. It happened in my last deal. There's certain stuff I can't talk about in the last deal, but a lot of times this happen. I mean, I don't know. I don't know if I have any data on it, but my gut would tell me that at least a third of the time, maybe even as much as half of the time, a deal gets to the week of and the
Uh,
buyer retrades
yes.
based on all the
No problem.
information they found out in the diligence process, right? So, one tip I'll give other founders who go into that process, make it real clear early on and just say, "Look, I'm unwilling to retrade unless we find out something that's materially impactful to the deal and your expectation on the deal, like something that's really not good. Outside of that, we're not retrading. Let's
Yeah.
just draw a line right now."
Okay. And, you say you had some luck and they reached out to you. You weren't shopping the company, you were chugging
Correct.
along and growing your company.
Correct.
Um, what did that sound like? Somebody reached out and said, "Hey, Chad." No, I mean, like,
Yeah.
how did that
So
start and how did that progress?
yes, they reached out to me, on LinkedIn like a year ago,
Yeah.
maybe over a year ago, and, we talked for a minute, you know, they lobbed an offer over to me. It was
Oh.
respectable. It was enough to for sure
Like a
think about.
verbal offer, right? Yeah. Or was it a
It
letter?
was a real offer.
Okay.
It was beyond a verbal, but it was a
Okay.
real
Yeah.
offer. But
Okay.
it was I think they were a little sheepish about it given that we were a tech company. I think they were a little worried that it wasn't enough,
Yeah. Mhm.
and I might have taken it. Like, it would have been okay. Like, it wouldn't have been, like, not respectable, and then but I said no, actually.
And why
So,
did you say no, Chad?
it just didn't feel right yet. It didn't feel right yet.
Things
It
were
didn't
going
feel.
well, you saw more potential. I
Yeah,
didn't wanna get off
yeah.
the train just to right away. You didn't have to sell.
I sold my last company too early. I got scared. I brought it to the board too early. We didn't
Yeah,
have to sell. We had a ton of revenue in my last company,
yeah,
and, I for sure got scared.
yeah.
And this time I felt like I was like, "You don't need to do that. We're good. We got options. It's not easy, but we got options. We don't have to sell." So I said no. My gut said, "Say no," so I said no,
Okay.
and we didn't talk for
And
about 4
politely. So
months.
you just said,
Yeah,
not
for
yet." Yeah,
sure.
right, yeah, right.
Yeah, no, I wasn't offended. I was like, and honestly, no matter what somebody offers you, you should never be a douchebag and be offended. You should say thank you. Like, the fact that anyone is willing to pay anything for something that you've built is a compliment.
Yeah,
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 there's some people would be like scoff. Oh, that's not
yeah.
enough for my numbers and what I need. Like, they should be embarrassed for acting that way. You should say thank you because you just never know. And here's a case in point. They came back 4 months later and about quadrupled the number.
Okay, isn't that interesting? And I've heard it
Yeah.
over and over again on the Practical Founders podcast, right? The first was a polite "No, thanks."
Yeah.
And it, no offense, not ready, but they don't have to sell. You have the optionality
Yeah.
and the durability to keep running, and people kinda like their businesses in a growth phase, as hard as it is.
Yeah.
And, first offers are usually a test anyway, and, they're everybody's testing each other, and usually it takes 2 no's to get to a yes, but you got 1 no and they jumped.
Yep.
So, because it's a hot time.
So
So,
then
yeah.
it got a little bit more interesting.
And then what happened? Did you say, "Okay, that's interesting, let's go through it," and then you went through due diligence
Here's the
and
funny part.
okay.
So they called me. I was literally on my way back from like an event, and I was like getting out of the pool to like take off. And it was a Sunday too. So the executive calls me and he's like, "Hey, are you too offended to start talking again? Like, did we offend you last time?" I was like,
That's
"Hell
nice.
no, just don't waste my time this time." And if it's real, like, let's make it count. So anyway, I fly out and I go and I meet with them in person. They're super cool, super gracious, very welcoming, inviting. At no point did it feel transactional to me, and
Oh,
that's
right.
usually the case. They're definitely like kind of dating, right? And, it just, like, so I go to meet with them, and I won't say the name of the company, but almost everybody on this podcast whoever's listening will know who this would know the name if I said it. So I go to meet with them, Venture and their team in person, and, I get a message while I'm on my way there. And I get a message from the person in charge of M&A at this other company. And, I'm like, "Holy crap, how did that happen?" How did they find out? Somebody
Yes.
talked, right? Despite everyone keeping things super, super I mean, to be
I
frank,
mean, did anybody on
I
your team know?
no, our team's too
Mm,
small and only one other person knew on my team.
yeah.
And somebody found out something, I don't know.
Yeah,
It could have been
interesting.
anything, right? There's a bunch of other people involved potentially. So anyway, I get a message and I get on with a huge team of people at this other company. Essentially, we work through and they go, "Hey, we can hustle, we can get this done. We can do this before you commit to another company." And I said, "Well, it just so happens I'm here to meet with them and I'll have an LOI tonight." And they say, "Oh, well, we can move fast if you give us a couple days." So anyway, I go to the meeting with the CEO of Venture and I say, and it doesn't always work out this way. I just be very careful to the right founder. Well, just that, like, it's actually in most cases you shouldn't share who you're talking to.
Yeah.
And so, but I was pretty committed to Venture. I was super impressed with
Yeah, of
their
course.
their team and stuff. But it just happened to work out this way. So I go to the meeting and it's a great meeting. I don't bring up this other group yet. And I'm like, Alex, CEO. I'm like, Alex, so and so. And he's like, yeah, of course. Of course I know who that is. And I said, well, I had a meeting with them this morning. They reached out to me. And he goes, like, are you effing kidding me? Like you could just tell, like, and he's like, you could just see, he's like, we're not losing this deal. And so they get me an offer, like, right away, and then we start moving it towards a close. So and it was the right move.
Yeah, good
We
for you.
we chose the right company. The I will say on paper or on social media, the other company was a sexier brand, was a,
Yeah,
a cooler San Francisco vibe, but
yeah,
not as cool to work with. Definitely not. Definitely doesn't
yeah.
have a great reputation. So anyway, just yeah, really lucky in that sense.
This is a common question for the founders I work with in my practical founder CEO peer groups who are fielding offers and
Yeah.
dancing, and some are going through the process, just normal stuff. Did your local lawyer get you through this? Did you hire an M&A lawyer that could do this? Did you use
Yeah.
ChatGPT for most of your
No,
lawyering?
no,
Yeah,
no. For
yeah,
M&A, I would not do that. I would pay the money.
yeah.
And also, by the way, it's like twice as expensive as it used to be. There's just like yeah, I was like, "Really? Is that how much it is right now?" Like, I know it's been a while since we did it last time, but yeah, it was a lot, and they did a killer job. We used Par Brown in Utah. They're
And they
awesome.
had M&A experience
Yeah,
and
for
real
sure.
senior
They
people.
have an
Okay, yeah.
M&A team. Par
Okay.
Brown's the 2nd or 3rd largest, firm in Utah. They're a bigger firm in Utah. Anyway,
Well,
they're great.
we'll
I've had a
continue
great
on with
experience.
this acquisition here. Was there any surprises on either side that they asked for something or that they got something that you guys had to work through in due diligence? I'm sure there was mountains of little
No, I
ones,
mean,
but
we did, like, technical and security scans, and they said that ours is the best that they had ever done,
yeah.
which thank goodness. From a security perspective, we had done a huge overhaul, like, a year and a half ago,
Mm.
hired this really great group out of Australia to help us. And, that went really well. There were no big surprises. What's funny is I was, like, more on edge than them by, like, a lot. Like, they were
Well,
like,
it
I
certainly means
remember
more to you than to
well,
them
because I had
overall.
s
Yeah,
I had scars, like,
of
at
course.
Jump, there was a retrade, they
Oh my
lied
god.
about stuff,
Mm.
like, they did at Jump, they did the whole, everyone's got a job," and then they lay off a bunch of people on the first day, they did all that crap, and so, I was, like, worried the whole time. I was, like, willing and able to walk away the entire time, but, so maybe I had them a little nervous just because of my
Yeah.
baggage, but
Yeah, you
they
weren't desperate. Yeah, yeah.
yeah, but they were really cool. There were no major surprises. No, we were pretty good.
Okay. Well, let's go back. This isn't your first selling the company rodeo, right? And
Yeah.
maybe this was like the opposite of experience that you had before. or at least very
Very.
different. 10
Yeah.
what would you say, 2019 was that?
Yeah, it was in 29 it was like the tail end of 2019 or the fall
Okay,
of
so this was
2019.
your 2nd company, but it was a software company this time in Utah. It
Yeah.
was called
VC
Jump.
backed.
Yes,
Yeah.
so, what was Jump? How much did you raise? Where did it start and where did it end? How did it go?
Yeah, so we raised yeah, just quick numbers on Jump. We got to about we were in business for about 3 years, got to about 90 people, raised about 13,000,000 on debt and equity
Yeah.
really quickly. We were burning about a house a month at the time. I remember when we used the burn rate was like a car every month, and it was
Yeah.
like, it just, then it climbed up
Torch in the
pretty
house.
quick.
Yeah, there we go.
Yeah,
Yeah.
we grew really fast though. First year it was 0 to 1,000,000 in ARR, then second year was 1 to 5, and then in year 3 we slowed down a bit, because I was worried about funding and continuing to keep it
Yeah.
going, but we got to about 6,500,000 in sales by the time we sold. So,
And what was
and
it at the time? So this a different thing. You're kind of in
yeah.
the
Oh, what the
talent
product was?
acquisition. What's that?
Are you asking what the product at
Yeah,
Jump
what
was?
was Jump and who was it
Jump
for?
was a customer engagement platform. So it was for small businesses to be able to text their customers, review generation kind of thing, like really early on in that reputation space,
Yes.
and then also like social media sort of publishing management, like from posting and also like being able to manage your online presence as a small business on like directories, when somebody
Ye
uses Apple Maps or Google Maps to find your
Which was a
company and then
chronic problem for all these
local
many small
businesses.
businesses that wanna
Yeah,
get seen and known and active, and they'd have no time to do it, right?
exactly,
Yeah.
exactly.
All right.
So
So
it
you
was a
you
cool
did the
product.
venture funding thing. Was that Utah local VCs?
No, because everybody in Utah invested in Podium, and they were a
Oh,
competitor of
the other
ours.
yes,
So,
across the street. Yeah. Mhm.
we had raised from Arthur Ventures out in North Dakota, and then a few other, like, family offices here in Utah. So there was some love in Utah, not
Okay, so
not
family
everybody.
office stuff and
Uh-huh,
all of that.
and then debt.
I knew you during that time. It was pretty you were in the crazy zone. It's
Yes.
gonna be many things to many people, and we gotta do this and hiring up execs in the basketball court, right, in the
Yes.
middle of your thing before the desks
That was the
expanded
coolest
over.
part. It was an
What's that?
expensive basketball court. If we
Yeah.
looked at the cost of, building that whole company, at least we had the basketball court.
Yeah, that's right. So that was a sign. Here's your sign. But, there was a lot going on. I was
Definitely,
visiting you then when I was visiting a lot of, software founders in Utah. It's pretty crazy. I gave you some advice and some therapy and everything.
definitely.
And, you know, you proactively sold this, right? You didn't keep raising
You're
rounds and
talking
everything.
about,
Jump.
Jump?
Yeah.
Yeah, so no, what kind of happened there is they came to us also.
Okay.
So, yeah, so we didn't, like, talk to any bankers or anything at the
Okay.
time, and what was interesting is that so where I was as a founder, I didn't have a co-founder, which made it really difficult, actually. So I was kind of just dealing with things in my own realm and managing
I
my
remember.
board and hiring all these really smart people and stuff. And everything was fine up through the Series A. So we did a Series A and then we did a follow on. So similar terms to the Series A, just higher valuation. Then we did a little bit more bridge, knowing I needed to get to a Series B. The Series B and all the numbers were looking pretty good. There were some discrepancies in our churn numbers, of course, because we sell to SMBs, right? Or did sell to SMBs. And so churn matters, right? That's like what everyone judges you on. As you know, you're at Infusionsoft, right?
Yes. Uh-huh.
And so anyway, you know, so I was going out to start the Series B process. I started the Series B process and we had I can't remember the exact number, but we had something like, I don't know, 9 months of runway in the bank if I made no changes or something. And, so I probably waited a little bit too long or we burned a little too much, but, like, we were growing a lot.
Yeah.
And if you're growing a lot, you're doing it right. We'll figure out the money
Yeah.
later kinda thing,
Yeah.
right?
Right.
So anyway, we go into the Series B process and everyone loved it. They loved the growth, but they were like, "It's really fast. Can you keep this up?" And so everybody who was interested said, "Give us 1 more quarter, maybe 2 more quarters." Some
Ah.
asked for 2, some asked for 1, and then we'll come back with a term sheet. And I was like, "I
It's
don't
a little
like
bit of a
that
trap
plan."
for VC funded founders who are in the
Yeah.
Spending to grow, but don't have any runway. Yeah.
Yeah, see, it's just so freaking risky, and sometimes it works and sometimes it doesn't. Like, look
Yeah.
what just happened, locally to SACE, right?
Yeah.
Killing it on social media, but, like, nobody knows what the founder was just going through for the last 12 months,
Yeah.
right? That's literally what everybody says too. They're like, "How did that happen? They were killing it." Dude, you don't know shit. You don't know if they were killing it. Like, you don't know anything. Just because you see that they posted they're hiring more people, that doesn't mean anything.
Yeah.
So, like, anyway, and there's a bunch of stuff I don't even know about that situation, and feel for that founder. I don't know if you'd heard, but they just announced shutting down 2 weeks ago, and they
Oh
were
my gosh.
killing it, right?
Oh, yeah.
So
Or
anyway,
killing
there's
it.
a
Yeah.
lot of dynamics going on with fundraising, and it will make you grow up, that's for sure. So,
So that's
anyway, what I
pretty
was
heavy
saying
is what you're saying, right? Is the,
you you said
you
what?
know, that's pretty heavy for you.
Oh, it was so heavy. So that, like I said, I think I just lost my nerve, and
Yeah.
like I was belligerent. I had nothing to lose. I didn't care. Like I didn't even have my first. I think my son was just born,
Yeah.
and if we needed to move into an apartment again, we didn't give a shit. Like, yeah, sign the house, dude. I literally signed my house on a line of credit. Like, I didn't
Yeah.
care. I didn't
Yeah.
pay the IRS for a couple years. I didn't like. I was all in, dude. I did not
Go, go,
care.
go.
Yeah, we were doing
Yeah.
it, and luckily, it worked out okay. But I do not recommend that for everybody, just taking these kinds of risks. But
So
anyway,
somebody reached out in that process and
yes.
you got a
Well,
transaction
no,
done?
well,
Yeah.
what's important is that I started the process for the Series B, and then I started getting this feedback, and not a couple weeks later, someone reached out. And it's 'cause people talk, right? Like, you go to
Ah.
these groups and they talk to somebody else who is an investor somewhere else, and a group reached out to me, and then what was crazy is that a couple weeks after that, another group reached out, and then we kinda worked that into a deal. So,
Mm.
and, then there was the retrade, and there was changing on terms, and then it led to a big lawsuit, and there was another great company called Reputation.com. Reputation.com ended up buying the company that bought us, because the pandemic happened literally a few months after we sold our
Ah,
company, and so
I
then
see.
they all started to struggle. Jump still to this day is going as a product being used. So Reputation bought it,
Mhm.
and Reputation.com made a lot of things right. And huge shout out to the chairman, now chairman. He was the CEO at the time of Reputation.com,
Yeah.
who would have already gone public if the market hadn't tanked in like 21 or 22, sorry. But anyway, they
Chad,
ended up
can you
doing some great
share a
things.
little
So
bit of what it felt like to go through that? I knew you at the
yeah,
time, and we were having calls, and during the transaction and the retrading and the, running out of money and, gotta
yeah.
sell and all that. It was, uh, it was pretty brutal.
Yep. What's brutal is knowing your cash out date and your close date, and knowing someone else wants it, but they want it a certain way. And if it doesn't close, then you gotta figure out another way. Like, no one gets it. Like, everyone offering opinions, super cute. Like, nobody's done it. You know what I mean? Like,
Yeah.
what 30-year-old kid, me, is managing a board of 50-something-year-old seasoned, experienced, very smart people, but investors, having to make decisions that impact, as many as 90 people's lives, right, and their
Yeah.
families, and right, I don't have the luxury to just think about my family. I gotta think about everyone else's family. And that no one knows. No one knows the pressure like that.
Yeah, yeah.
Like, good freaking luck, you know? I remember talking to my therapist, and, it was earlier on, and she goes, "Tell me about your stress level." And I'm like, "It's okay right now. I'm probably stressed," and she's like what? Like, how would you put it? And I'd say, "Oh, like a 5," and she's like, "Well, that sounds, uncomfortable, and tell me about it." And I tell her why. I was like, "Well, I need about $500,000 in, like, 2 weeks." And she's like, "That's extremely stressful. Is that only a 5?" And I said, "Yeah, that's a regular freaking day in my life." Like, it just your muscle f for dealing with that kinda stuff, just you almost become numb to it, and you don't get scared the same way you used to get scared. And that's what makes you valuable, I think. But, um but anyway, I got to this point, and it was like, "All right, take this deal or go see how it goes fundraising for that Series B," and I took the easy path.
Yeah.
And
Well,
and
and
that's
you can
and
argue
that's
it both
what the
ways, and maybe you could
well,
argue that, yeah,
I felt bad that I like, personally, not I, because there's other feelings of maybe letting other people down.
yeah,
That was certainly there. But for me personally, I felt like I had given up, even though it wasn't a bad thing. It felt
right.
bad in some ways, but I felt like I threw in the towel when I coulda kept punching.
Okay,
So,
yeah,
it's interesting though because, then it begs the question, like, do you regret any of that? And that answer is no. Because I'm in a great spot because of that, and I'm in a great spot of where I am now, and not because of that necessarily, but, like, you can't live regretting what it is that you're doing, right? So, it just is, you just make a decision, it just is. But
and
it
you
was
survived
emotionally taxing.
a challenging transaction, right?
Yeah,
Retrading
for
and
sure.
getting
Yeah, it was
through all of this, and you
well, it
got
wasn't
through it.
just that, like, some of the things that made it difficult is that we had only so much cash, and deals take time to close. They take several
Yeah.
months. They take, like, 4 months to close, right? And, and
Longer
so
if you
the
have less cash, right? That's the point.
yeah. They'll make sure it takes longer.
Yes, of
But,
course.
like, then the buyer sometimes, not always, puts pressure on you to optimize and get ready to sell to them, right? And so in that case, I was young, I didn't know what I was doing. Instead of telling them to go to hell, I was like, "Alright, so let's cut some people,"
Yeah,
and that just seemed like the right thing to do. And then I had leaders that were, pandering for virtue, no offense, to any of them, and, "Well, how could you do that?" I say, "Well, how else the hell are we gonna do it? You got
yeah, right,
another option?" Like, so there's
yeah.
just so many things that go on, and it's funny, like, the virtue signaling people, in lots of scenarios, not just at Jump or now, are they're the ones that don't have anything at stake.
Right. You had a lot at stake. You managed to sell this
Yeah.
company. You had a little prize money,
Yeah.
and you took some time off, right?
Yeah, I did, and I was forced to because so that was
Non-compete.
a whole other thing. I almost blew up that whole deal because they wanted to require me to go on the deal, and it didn't feel right. I got to know the buyers better and better, and it just didn't feel like the right thing, and so I said no. I said I would help transition, and I kinda helped for a bit, but then I was out, and then the pandemic happened, and so it was like, now's not a great time to so I got to make up time with my family, and that was great, but then I was kinda sitting around and my dad died later in 2020, not of COVID, but he just got sick and passed suddenly. And I remember thinking, "Life's short, like, literally really short. I wanna do the things now that I wanna do instead of waiting," and so I started racing cars at that point, and then I treated that like its own little business for a bit. That kept me busy, like my creative brain and got all the sponsors, volunteered to the racing series, volunteered with different teams to learn, and then entered my first race, got lucky, got second place in my first race, super beginner's luck, like literally, and did really well in my first season. Then after that, going into 21, I was kind of like, well, what now? What do I do now? And my wife kind of described me as being like, I don't know, she kind of described me as not slothful, but like there just wasn't drive or energy in me.
Yeah.
And I was just kind of doing my thing each day. I wasn't passionate about anything. And, other than racing, I
Like a
loved
normal
racing.
person.
Yeah, I was just, yeah, I was different. Like, and so it's kind of funny to hear her describe it. But so I started stewing on these ideas. And I remember going back to my wife one night and I was thinking about this idea that became Distro. And I was literally sitting out by the fire in my backyard writing names down of potential co-founders, and I was, like, scratching ideas, and I couldn't figure out how to productize this idea, and so I was struggling with that for a couple weeks, and then it hit me. I was like, "This could work." Like,
Yeah.
I figured it out. I figured out how the interface would work, how a user would consume the product, right? And,
Mm.
this concept. Anyway, so
What was the
I
concept? Like, what was
the
the
concept at
basic
the time was, okay, so if you need to hire in another country
Yes.
particularly around software engineers. At the time, it was super high demand to hire engineers. Your
Yes.
option was to go to a dev shop, which everyone hates that process. It
Right.
mostly goes bad unless you hyper babysit it, usually is bad. Or you go to, like, a low grade, low quality marketplace like Fiverr or Upwork or something,
Yeah.
right? And you get anybody. You don't know who you're getting, and they're no control. They're not a full-time team member, so I'm like, "Why don't we build a
Did you
marketplace?"
experience that? Was that, like, something you'd been
Yeah,
through? Or
yeah,
yeah,
for
right.
sure. I'd experienced that in different ways in the past for sure, and I wanted to go build a global team at Jump. I was going to do it, and I just never got the opportunity to do it. And so, and there's saving money, there's time zone alignment, of,
All that.
being able to code and program every day. And so there just wasn't a lot of options for customers, and so I thought, let's build a platform that allows a company to hire someone directly in another country, like for full-time employment.
And you
And
became the employer of record, a little bit like a PEO, right? That
yeah,
puts
yeah, yeah,
people on their
exactly.
book.
Right.
Yeah.
Right, right, right. Yeah, so really interesting sort of concept, but I remember going to my wife, and it was coming together for me, and I said to her, "We don't have to work. We're okay." Like, financially, I mean, I'm not, like, buying a jet or anything, but, like, we're comfortable, or I could do this again. And I said to her, I said, it wouldn't it be a shame that all of the things I learned last time or the
Ah,
last couple of
yes.
times
There you
that
go.
I didn't use that again? I was just getting good at it,
Yeah.
right? I was just getting better at it. And then she said to me, she goes, You know, and it's funny, my wife's, like, so chill and low key, she's not, like, a motivational speaker or anything, but she'll hit you with a zinger every once in a while. Like, my wife literally, if I'm like, "Let's sell the house tomorrow," she'll be like, "Alright, let's talk about it. I don't like the idea, but I'm open to it." Like, she's just super
Let's play.
chill.
Yeah, let's go. Yeah.
Yeah, so, but honestly, if I chose not to do something again, she would support me. So anyway, I said to her, "Should I do it again?" And she goes, "Well, we didn't do this together, just life, to be mediocre." And I was like, "Shit. Alright, done. I'm doing it." So I went and rented an office, like, a couple weeks later or a week later or something, and got to work on the next thing.
And did you have a co-founder in this?
Not yet, not at this point. So it was probably, I don't know, a few weeks later to a month later, I approached Andrew, who's on my team now, and then I approached another guy to help us run tech, who's not on our team anymore. But I assembled the team within the next like 6 weeks or so. Brittany is on my team too. She's been working for me for 10 years,
Yeah.
so she joined as well. That was easy. So
And
we
so did
started with
you
a small
know that
team.
you knew 20 founders who were all struggling to hire engineers in Utah
Yes.
for
Yeah.
$300,000, right? It's the world has
Yes.
changed now, but, like, during COVID and the VC funding was raining over
Literally.
Utah, right?
Uh-huh.
But you knew you could call people and say, "I can get you A-level developers this week,
Yes.
for this price," kind of thing, right?
Yes. So what we did, and this applies to everybody starting a company right now, you don't write any code yet. You figure out a way to do it in spreadsheets and Gmail and something, right? You don't write
Yeah.
any code yet. So we put the concept together. We said, "Let me call some friends and ask them for some product feedback." And that product feedback is, "Do you have this problem?" You define it really clearly, and they say yes or
Mhm.
no, but most say yes. And you say, "If I have this solution that I'm gonna describe, will you try it?" "Yes." "Okay, if it works, will you buy it?" "Yes." "Okay, cool. We'll be back in a minute." So we figured out a way to repeat it using humans to
Yeah,
to do the process to test it whether it
manually.
worked. Manually, exactly. And, like, literally, if you're sending notifications, you're just send that manually. We don't care, right? You don't need to
Yeah,
code anything right
yeah,
now at this point. Even with AI, don't even mess with it yet. Don't over architect anything. You go see if you can take somebody's money and if they're happy about it. That's what you should do first. So we did it. We literally, uh, I drummed up a few leads. Andrew drummed up a few leads. We went to lunch with the leadership team at 1-800 contacts. Still don't know why they trusted us to go to lunch. We had 2 quick meetings and they're like, "Done. Sign us up." And it was like $400,000 in ARR. We're like, this is gonna be easy.
But it wasn't like software revenue. This was the cost of the people
This
and
was the
passing it
marketplace,
through and the
exactly, right.
marketplace. So
So
you know,
so that
you
would've
were
been
like
total
a recruiting
GMV.
company or something like that. Yeah.
Yeah, yeah, so that would've been total GMV and, a large chunk of
And
that
you
would have been,
made
like, our
50%
revenue.
margins or something weird like that.
At the time, it might have even been more, I don't know. It's definitely not that way now, it's a lot less now,
Yeah.
but it might
Okay.
have even been more, but at least 50% at the time, yeah.
How long did it take before you turned that into software?
We started writing code maybe a month later,
Okay.
and then we really started pushing the product and selling the product beyond the first handful of customers. We started pushing the product because we sold the first stuff in the spring of 22.
So people say, "We'll take engineers that look like this. If you can find them, we'll get them." Did you literally
Exactly.
manually go find them?
You know
LinkedIn
what
and
we
all that
did?
stuff?
We
Okay.
literally got a commitment for a deal with no way to fulfill it. Is the best possible thing to happen. Okay, so some founders are gonna stress out about, "Well, how are we gonna do that?" You're like, "Well, you're gonna figure it out because you wanna
Yeah.
get paid, right?" It's the ultimate forcing function to
Yes.
build good product rather than try to ideate it and then code it and then see if it worked. Oh, like,
It's
literally
the most
go
efficient forcing function as well. You didn't
Yes,
randomly create
exactly.
all the stuff. Yes.
Exactly. So you
Yeah.
know what we did? We went on to we went on to Fiverr and we hired a slew of recruiters and we said, "Go find these
Oh,
people."
right. Yeah.
Like, literally, how simple and rudimentary is that? So then we started processing the data. So then we had everybody coming through. So then what we did is we started creating the parameters for how to qualify candidates. That ended up being our algorithm,
Yeah.
which then ended up being our AI prompting later.
Yes.
And it
Well,
just got better
let's
and
go a little
better.
faster here. You turn this into a marketplace, a two-sided, so
Yeah,
your
yeah,
clients could come in and see candidates on there. How did you get all these
yeah.
candidates?
Yeah, but here's the thing. Here's what was the great thing about the way we set it up. It wasn't a marketplace like Fiverr where, okay, so let's say you need to go to Fiverr and hire somebody and you
You
go in and
search
and you
around. Yes, right.
peruse. There's just so much crap in there. Like
Yeah.
it's just a lot. And then they try to create ways to like promote or prompt,
Yeah.
certain candidates to you, but it just doesn't make a lot of sense. So Distro today even is still not built in the way where you can just go in and peruse
I see.
candidates.
Alright. Yeah.
The way that the marketplace in distro is made is that it matches candidates to you. You don't want to see 100 options. You want to see 4 or 5,
Yeah.
and then you want to choose one. So, what made our AI so great over time is that we could get people in touch with a handful of the best and the brightest, no matter where they were. That's what made such a huge
And that's
impact.
fast too. Are
Yeah.
you hiring? Not really. How about these people? Oh, we're hiring.
Yeah. Yeah,
Yeah.
no, no, no. Yeah, exactly. But
Yeah.
what got hard though, like it felt like I remember when we started, we sold literally a bunch. We were like profitable. Like there was 1 month early on, I think we had a net profit that month. And it was some of it was just cash flows. Like,
Yeah, yeah.
doesn't mean you're gonna run that month every month, but it was like $50,000 profit. And I was like, man, wow, this is freaking easy. Like this is gonna be so great. And then the tech market just literally took a dump in
Funding came back and,
Oh,
came
yeah.
down. Yes, right.
June of 2022, right?
Yeah.
VC dried up completely. We even had an offer from a VC and, local here in Utah, and they retraded, and we said no.
Remember.
And so then we didn't do the deal. So then I funded it, got us started, and then we used a little bit of debt here and there and then just focused on sales. It's weird. Weird what happens if you focus on sales.
Yes, right, and follow the trail, which keeps changing as the world changed. The world changed again. You had AI. I mean, you
Yeah,
say we're an AI first. We're this agentic recruiting
yeah,
platform that was really valuable to this big company, but you started off helping people find people overseas and put them on your company, not on their
yeah.
company, as contracting them out, I guess you'd say. And, then you built this, software supported version of that. How did you get to the 1 or 2 or 10 hops? Was it a pivot? Was it an evolution? Was it
So,
incremental?
yeah, that's what's funny is I don't know if I would call it a pivot. I think it's easy for everyone to call it a pivot, and it might be, I don't know, but the reason I don't really
Looks
refer
like
to
a
it as
new
a
thing
pivot
for a new audience, but
well,
yeah.
it was a natural evolution because we were already running all of these interviews, right? And so
Yeah.
what we knew we needed to do was get to an automated interview, which isn't a new technology. You can go and get these like
Yeah.
canned
Yeah.
interviews for HR stuff. Everyone gets the same question. There's no prompting on the scores or anything. It just spits out data after, right? We knew we could do that, and we thought there was ways to improve it. Then AI starts becoming a bit more mainstream, and we immediately jumped into it. We even tried to build our own model and, like, quickly learned that doesn't make sense. There's no value there, right? Like, license the models
Yeah.
from different groups. So, but we knew we needed to do this automated interview, this AI interview, and so we started doing interviews. Then we started introducing AI into this natural process. As we were doing that, this is a couple years ago, the, as we were doing that, like, our customers started coming to us and saying, "Hey, you're really good at getting good people in front of us, like, way better than any manual, like, RPO or recruiter, outsourced recruiter we've ever worked with, and you get them, like, today or tomorrow or the next day. How does that happen?" We're like, "Oh, that's our tech." And they're like, "Can we buy that from you, actually? Like, the
Yeah.
marketplace thing's really cool, but, like, can we use that?" And we're like, "We were trying really hard not to be a SaaS company, but I
Yeah.
suppose." So what we did is then we in a very short amount of time, we took our product sort of, module, like our AI scoring and reviewing module, and we said, "Why don't we just attach that up to a company's ATS? We can have it process every candidate that comes through the system, everything. We can score all of them. How about we go back and we score all of the candidates they've ever had come through their ATS in the last 10 years?" Pretty freaking powerful, huge
Yeah.
batches of data. How about every, large company that connects to our platform and how much data they gather and capture and how much data we can produce for them? It gets very, very big very quickly. So
And so
we did
you
that.
had, engineers were building this little marketplace thing or
Yes.
whatever, but did you have to rehire, retrain, experiment with the first wave of
Not
generative
really.
AI and new data models and all
Not
this kind of thing?
really, we've had a small engineering team. Our first engineering team had never done anything in AI, and all of the best engineers really started learning it very quickly,
Yeah.
and, people will joke and call them, like, prompt engineers, but that's kind of what it's becoming, knowing how to work with AI instead of work on AI, if that makes sense, in a weird,
Yeah.
creepy way.
Well,
So
the
yeah,
CTO of Spotify, the music
yeah,
player, says
yeah,
their
incredible
top
team.
engineers haven't coded in a year.
Yeah,
They're
exactly.
guiding the coding
Exactly.
by
So
AI.
everything we write is enabled by AI currently.
Okay.
So it's, we've always been very AI forward since it started, and, like, we lead with that. So if there's something, and this is interesting, this is a whole other product discussion, but I think, if there's founders here that can take something from this, there's a huge shift happening in product, and don't forget this, the shift is this. We were trained for years how to make applications more addictive. The more we could prompt and get users to enter our app, spend screen time on the app, to click, tap around, perform, put data in, get data out. That was the goal. Not anymore.
Value
The
was
goal,
usage, right, yeah. Mhm.
yes, exactly. Now, the value is in not requiring them to log in. It's the complete opposite. So where there's a lot of founders struggling with this pivot in utilization is that they're still looking at activity traditionally in their application.
Click, 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 yeah.
Exactly, rather than the end result. So anyway, we're in the middle of that, and I think it's gone pretty well, but
So yours is kind of headless, maybe it's an API driven thing, and magically things get scored, and magically in the ATS, it the best candidates pop to the top, thanks to Distro.
I would say it's about half and half right now of companies that, let's say they're recruiting team members who are their users in Distro. They're primarily operating out of the ATS, but Distro's processing everything and feeding them data. And then the other half are choosing to work in Distro.
Okay,
But
yeah.
again, it doesn't require a lot of work in the app.
Yeah,
Even then, it's going in and clicking a couple of triggers. So after Distro does all of its work, a recruiter might visit a page of a job and see a list of all of the candidates, and the app has done all of the data input and output, right?
right.
And then they say, "All right, I wanna schedule and meet with this candidate." So they click a button, and Distro conversationally schedules and coordinates time zones and event invites and everything for them for that candidate. It's pretty
Just
wild.
do it.
Yeah.
Don't make me do it. Just
Yeah,
do it.
yeah, exactly.
Wow.
It's pretty
So
wild.
we heard about Jump. We heard about
Mhm.
Distro, funded small businesses, not funded, turned into AI for large companies that have the recruiting problem. You did Distro differently. We had plenty of conversations about this. We had the practical founders kind of conversations about it. What would you say you did deliberately different in Distro that worked?
Huh.
Funding
Um,
before, no funding this time?
I remember an early lesson for me, like, getting started. I might even have the Post-it notes sitting around somewhere on my other screen over here, and it says, "No one's gonna do it for you." Going from being a first-time founder, and or, stick someone else into that mix, call them like a seasoned executive, like you. Let's say you are gonna go start a startup tomorrow. It's on you. You're gonna do it,
Yeah.
right? And so, there's no way around that, being myself coming from, like, a founder before and had a team of people building spreadsheets for me and building slide decks and all that. No one was gonna do it but me. So, if I wanted to get something done, I had to actually get my hands dirty. So that was one. The other one was that somebody gave me some advice after Jump, actually. At Jump, I was being very mechanical and I was like following the process, right? Hiring the right people with the right resumes. And,
VC
you
template.
know, yeah, literally the VC template. That's what I was doing. I was, with my product, my spreadsheets, my churn, my, board decks, all of it, right? I was doing it like it was supposed to be doing. And somebody gave me advice and it was like, you don't have to be so prescriptive with everything that you do. It doesn't have to be the exact same. And I was like, huh. So I used that this time and I thought, I don't need to do it that way. I don't need to stack a team. I don't need a leader of CS right now. I can have a leader that does CS and something else. I don't need, like, let's just go do what works and
Very
just
practical.
f- yeah, I would call that pretty practical, right? So I did things very differently. I was not anti venture funding,
Right. Yeah.
but I didn't think we needed it yet. And then as it turned out, the way that this story played out, we didn't need it.
Yeah.
And it worked out great. Worked out really great.
One of my founder friends in Phoenix gave me this line about 10 years ago. He said, I wasn't against venture funding, but they always said, we would value you more if you did this. So he went and did that and he came back. And then they said, we'd value you more if you did this. So he got to 10 million in a software business, very profitable. And so he says he procrastinated funding. Mike Rogers has been on the Mike
That's
Roberts, who's
funny.
been on the podcast. Yeah.
That's funny.
Yeah.
Yeah.
So anything else that you deliberately did differently with Distro after your adventure with
Yeah.
them?
The thing at Jump, one big problem at Jump that I found out too late was that we created a tail wagging the dog situation.
Mm.
We had sales dictating what was going to be built. As soon as the company started growing, I started focusing on sales because, yeah, we got a product we can sell now. Let me go over here. Let me go over to go to the sales team. Then, because we were so sales focused, the sales team started dictating everything we were building. And it should have been totally, totally the opposite, And then we started looking at support tickets, and it'd be like, all right, whatever the customer was upset about, we need to go fix. And that is just so sophomoric, like, it's just immature in the
Well,
entrepreneurial
a lot of
sort of
software
journey.
companies are that way. They're not intensely product driven with
Yeah,
the leverage,
and well, the problem is that we should have known that, the people that were very unhappy were unhappy because they were the wrong freaking customer. And it was just so
Right.
now it's so obvious, but looking back, it's like we should have gone to the customers that were the most happy and said, "How could we make you happier?" And then sell more of those. That's what we should have done. Right now, with experience, now I can kinda do that. So I left the jump experience and building that company and selling it thinking I have to learn the technical product chops. So I literally learned design. I went back into programming. Like I helped out several friends like that were building different products and things and I got like hands-on involved, you know? Like this was the year after, right? Cuz
Yeah.
I just had time and I was
Yeah.
like I got to get better at product. And so what I did differently at Distro was that I was very involved in the product the entire time. I still am today.
Yeah. Good for
Like
you.
very involved and I love it actually.
Yeah.
I love building product. It's one of my favorite things.
That's awesome. Well, congratulations again, Chad. I've known you for all these years and known you through these adventures, the ups and downs and ups, we would say, and you're on the other side of it. And you have an exciting opportunity, with your new home in Ventura, the company that bought Distro. Thanks for being on the Practical Founder podcast and sharing that story. I'm going to ask you about something you mentioned to me in our conversations here that you created what was your freedom fund, right? Your cash flow. You managed it so you never got in a position where you had to do
Yeah.
something that you didn't want to do. But why don't you
Yeah.
explain that as our last experience share for the
Yeah,
audience?
yeah. Thanks for bringing that up too. I forgot about that. The one of the early investors in Jump actually is a friend of mine, and he runs this huge accounting firm. He actually just had a huge practical exit recently, sold for a massive number, profitable almost the whole time. And he taught me tactical accounting. He was an accountant by trade. He was a Big
Nitty
4
gritty.
guy,
Yeah.
and he goes, "You gotta know your numbers, not just in the way you hear on Shark Tank or people talk about it. Like, there's so many founders that don't know their freaking numbers. Like, how do you not know your numbers? You just hope to it all works itself out in 6 months from now. Like, that's not how it works. You will go out of business." So, I learned how to do a daily cash flow forecast, and ever since then, I've been running one, literally, and it might seem a little too microscopic for many, but guess what? There's no freaking surprises.
Yeah.
So literally, it looks like a P&L daily, and, every, like, 6 months, we'll either rebuild it or readdress it, but we update it literally daily, and it shows all of the inflows and outflows of money, and where it goes, and I check it every other day or so,
Yeah. And
sometimes
what did
daily.
that what did you gain from that?
I mean, I literally could tell you 9 months from now, the day that we would go out of business if if we didn't have enough cash, unless there was some change, right? And we had certain assumptions I could build like a model almost where I could add a few things, but it wasn't intended to be a model, it was reality.
Yes,
It
right.
was, "Here's what it
I'm an
is."
actor.
If you wanna mess with some assumptions, sure, but that way, it's a lot less stressful knowing the facts. Like, if I need to let somebody go because we can't afford them, then it is what it is. Or if I need to hire somebody else because, like, you when you know the facts, you can make things happen, you know? You
There
don't
you
have to
go.
sit and wonder and hope it works out. Like, let's look at the data. Here's what the financial data says. So and also there's no surprises. How many subscriptions are startups paying for they don't need anymore? Now you know.
Right.
So every founder, I don't care what your background is. I don't care if you're the most anti-accounting personality possible and have 0 mathematical aptitudes, and maybe your background is sales or something else, but you have to know accounting. Like, you have to know the basics of accounting. If you don't, you are at a huge, huge disadvantage, especially when you go to sell.
Yes. And the magic leverage when you know the depth of the business model down to the cash flows and the, expenses and profits and everything, and the accounting treatment of it and taxes and all that, and the product and the customer problem and so forth. That's where the leverage it is. It isn't just throwing salespeople and funding on top,
Exactly.
right? It's making a magic, high leverage
Yeah,
company
and
that
and
grows.
and and here's the thing, right? Getting back to practicality, like, the model that you're operating off, because I would say half of the founders operate on a financial model, right? Models
Mhm.
You remember Jeff Mask, I don't know you know how well, he
Sure.
used to always say, "All models are wrong and some are helpful." And it's so true. They're all wrong. They're literally all wrong, even if they're better, if they turn out better. But the point a model is not going to tell you reality. A model is gonna give you an idea of where you could be. And so the practicality of a P&L and a balance sheet tell you what is actually happening and what is possible. So anyway,
Yeah.
I think everyone should be doing it.
Awesome. Well, Chad, congrats again, and thanks again for sharing your story of all your adventures. The adventure continues. I'm sure you'll have another adventure down the road.
We'll see. I don't know if I have it in me anymore, but it was great talking to you.
Okay, thanks, Chad.
See ya.
Thanks for watching this week's interview on the Practical Founders podcast. Be sure to like this episode and subscribe to the Practical Founders YouTube channel to keep up with my weekly in-depth interviews with serious software founders who are building valuable software companies without big funding. You can check out my blog, all the podcast episodes, and information about my Practical Founders CEO peer groups at practicalfounders.com, or message me on LinkedIn if you'd like to connect. See you next week.